Once again, colleagues, you are welcome to the Gender and Access to Finance course. This time round, we are now going to be looking at our 9th module for this course. I would like to start by thanking you for coming this far in the course. I think it's always an honor to know that several of you doing whatever it takes to take this course and to continue to follow up with the different things that you have to do, including some of the readings. I hope you are getting something out of this process, and we look forward to seeing you when you have completed this course and you get yourself a certificate. But right now, I'm going to be speaking very briefly on this PowerPoint that focuses on gender and access to finance. I will be highlighting very few dimensions, but the critical ones, and the rest you can read in the narrative to this module that will help you to understand what else one needs to know in this area of gender and access to finance. I want to encourage all of you to read a little bit more widely, because what we cover in this course are really the highlights. And I would like to, if you want to know more, there is a lot of literature on most of these things. And if you can share, if you want anything, you can really just write to me, and I'll be able to send you some references and help you with something that you may need to help you to get the right literature. This course is also a very important course in as far as it looks at a number of important dimensions of gender and access to finance. And in this course, what we do is to provide an overview of the role of finance in development from a gender perspective, laying the conceptual foundations that permit an examination of microfinance as one of the main strategic tools used in Africa to promote poverty reduction and gender equality. The module also introduces some of the theoretical, institutional, and policy frameworks for the financial sector in Africa, and then the idea and practice of microfinance in particular, highlighting the consensus as well as contestations around its potential to reduce poverty and empower women. The expected outcomes are four. One is we want to introduce you to some of the theoretical, institutional, and policy frameworks for the financial sector in Africa. The participants should also, after this course, be able to understand the evolution of microfinance in Africa. And participants should also be able to identify and broadly discuss some of the gender dimensions of finance and microfinance, and some of the policy implications of these gender dimensions. We also hope that at the end, you'll be able to develop a gender-aware approach to finance and microfinance in particular. Now, when we talk about gender and microfinance, there are several things to talk about, but let me start by saying something about finance as a branch of economics, because as a branch of economics and finance, what we are dealing with is the management of money and other financial assets that can be bought and sold and lent or borrowed through financial markets and institutions. The set of institutions that facilitate the buying, selling, lending, or borrowing of money and other financial assets is known as the financial system. So in theory, the buying and selling of financial assets should follow the laws of demand and supply elaborated in Module 1 of Gender and Economics. In practice, supply and demand explain the buying and selling of financial assets, but the explanation of the supply and demand for financial assets is complicated by the intricacy of the financial assets created in the financial system. Much of the buying and selling of financial assets in modern financial systems is of assets that have not yet been produced. And that can confuse those who don't understand these terminologies, or those which the seller does not yet own, but which other sellers lends in exchange for a payment. And more generally, savers are individuals or institutions that supply money in the form of deposits to financial institutions, and the saver does in turn return, get an income that flows back to the saver in form of interest payments on the savings from the financial institution. Now, the financial institution uses the money that savers deposit as a basis for advancing credit, which is the transfer of an amount of money from a lender in the financial system to a borrower inside or outside the financial system. Now, to obtain a loan, a borrower usually must provide some collateral or an asset transferred to the lender in the event of a default. And this could be anything: title deed in some places, of land, or anything of that nature. And in obtaining the credit, the borrower acquires a debt that must be repaid in full. In addition, the lender does charge a price for the loan, which is the rate of interest, an amount that the borrower must repay above that which the borrower borrowed. Now, financial institutions make money by lending money to borrowers at a high interest rate. Then they pay the savers who deposit their savings in the financial institutions. So that's how money is made. Financial profits, thus, are a redistribution of resources away from a borrower towards a lender. So the financial system involves a cycle of savings, depositing, lending, borrowing, buying, and selling, with financial institutions acting as intermediaries between those who save and those who borrow. Now, when we come to talk about the issue of women and access to financial markets and services in Africa, this is an issue that has been debated by several scholars, and one that I want to invite you to read a little bit about. I have a few articles that I can share with you. Just let me know, send a message, and I should be able to share with you some of these articles. But very briefly, rural women are said to have higher saving rates than rural men. However, they have lower cash incomes and do not meet the legal requirements for entering the banking sector. And that is usually the constraints that is faced by most of the rural women, that they do have high saving rates when you compare to men in the same locality, but then the amounts are much lower and the incomes are much lower. And sometimes they do not have the required requirements, the legal requirements like collateral and such other things. So women end up holding their savings in non-cash assets or cash or informal financial institutions. So you find that that becomes a phenomenon that we have seen across Africa, where women are saving in very informal or non-cash assets in order to be able to stay within the financial system. And therefore, gender inequalities also in property rights and biases in the financial sector sometimes shut out the accommodative monetary policy, like the increase in formal lending. As you know, because financial institutions will require some kind of collateral that in itself can mean that those who do not have property rights may not be able to access. And this affects women more than it affects men, but also some of the inherent barriers that are there in the financial systems around legal requirements, for example, could in themselves reinforce the inequalities that we see when women, especially rural women, try to enter and access the financial market. Now, money lenders still provide some kind of common informal financial institutions, which usually include exchange of relationships beyond the financial markets, like market for land, market for labor, and many other things. And we have seen this phenomenon in many parts of Africa, where money lenders play a role in making finances available at very high interest rates in exchange for pieces of land and such other things. Now, let's quickly look also at the issue of approaches to microfinance in Africa. Now, microfinance in Africa is rooted in the assumption that access to microfinance is key to poverty reduction and economic empowerment, and that microfinance recipients will invest mainly in income-generating activities. So that's an inherent assumption that governs a lot of the microfinance institutions in Africa. And operational approaches include things like group-based systems, sometimes specialized lending by some NGOs, the rise and expansion of cooperatives and savings and credits cooperative organizations, SACCOs, as well as rural banks, all other types of operational systems that are there in this area of microfinance. Now, microfinance institutions operating outside the banking sector have to find their own sources of funds, and this is supported by mostly local cooperatives or local clubs or village associations or rotating funds, which are central in the creation as well as in the mobilization of savings. Now, the lending approaches usually include poverty lending, subsidized by donors. There are some donors that put together money sometimes that's focused specifically on people with certain characteristics. And this is characterized by people working together in groups. There are those who, for example, will only lend to those who are in groups. The financial system approach is usually and mostly commercial in its orientation, and it usually focuses on what is quote unquote usually known as the active poor. This is a term that is also debated a lot within this framework of financial systems, and it is something that you may want to understand a little bit more of. Gender and macro finance and economic empowerment, again, is another important area that you will meet in this course. And let me say one or two words about the key messages on this. The first one is that women have been fairly disadvantaged in formal credit. And women are usually targeted in different ways by microfinance institutions. We've already said this, but this is something that comes out a lot in the literature, but also in the practice of microfinance. And loans to women have continued to be small, and they have continued to target economically active women. And this leaves out leaves out those who are most in need. And that can also reinforce gender biases in the financial sector, including disregard of the amount of care work. So if you go and look at the analysis that is done on loans to women, sometimes they are small, but also in terms of their target, they still target what is known as the economically active. And that in itself can mean an exclusion for those who do not have certain abilities. Poverty lending, it still has to contend with the reality of gender inequalities at the household level, including the role of men. I mean, even if you use poverty as a dimension and a criteria for lending to the most poor, one has to understand that the dimensions of gender and power relations in the household can still become an impediment in how women and men engage with the issues related to microfinance or even the use of the resources that emerge from microfinance. And microfinance institutions also make the assumption sometimes that when you reach the group, you have reached the poor, and those who cannot join the group are then left out. There's a very interesting paper that was written by colleagues of ours, published now in actually a book that is called Find the Groups and Find the Poor. Anyone who is interested, I can share that paper with you, but it does actually get into this question quite a bit more. Women have also higher rates of repayment. This is another statistic that has emerged from the microfinance institutions, and 90%, and they say that nearly up to 90%, and yet others say that this can reinforce bias towards women with a focus on being on repayment rather than the impact of the funds. I think there have been quite a lot of debates about does quick repayment actually mean that these funds have had an impact? Or can you do quick repayment because you are scared because you do not know what else to do? And so this is an area that one has to sort of engage with and understand. Organizational structures of microfinance institutions are also heavily led by men, with 70% in management, with only of those who manage microfinance institutions are actually men. And yet 90% of the clients for some of these microfinance institutions in some places are women. So again, the gender disparities there is something that we have to interrogate, and also the gender, the power relations that relationship in itself can create. So as we think about the power that comes with microfinance institutions and what they are able to do, I think one needs to think about what else are we missing in this kind of dimensions. So what are the debates to summarize? I think there are several debates, but some of the key issues to summarize in this area are not so many, but let me just mention some of the key highlights. In terms of positives around microfinance and women empowerment, those who are supportive of these approaches do say that microfinance does actually impact, and it is an effective coping mechanism for poor women and men. And women access positively, and some say that women's access to this microfinance is also in itself having positive outcomes and effects on nutrition in homes, on health in homes, of the schooling of children, and many other welfare variables at the household level. And also that microfinance helps to increase the skills of recipients, like those who may never have been in business are able to get into business, and that makes them develop skills in business, and also helps them to develop many other skills. As you know, when you are in business, it's not only buying and selling skills, it's the leadership skills, the planning skills, the selling skills, and many other skills can emerge out of the fact that one is participating in business. On the negative side, there are those who have argued that some of the negatives are that microfinance has failed to reach the extreme poor and tend to focus on the non-poor or those who are near to the poor. And the point being made here is what we have touched on before, is that when you add the acronym, the word active on poor, sometimes you may actually end up with those who are actually well off, who may not actually need the money, who may have the, who may not need the money as badly as those who maybe are even invisible. So again, the debate is that maybe microfinance may not be actually targeting and reaching the extreme poor because of the fact that in itself, it is designed in such a way that it engages with the active poor. There is also little evidence of economic gains of microfinance. Some of the analysis shows that yes, while microfinance has expanded, but we haven't seen a commensurate expansion in poverty reduction. That yes, there could be an expansion in, for example, the number of circles in a country like Uganda. But when you go to actually look at the evidence in terms of how much are we seeing in household welfare improvements, the link between that and the expansion of microfinance is still debatable. Now, microfinance is not also known, is not also known, in a brief way is to say, microfinance is also not known to have dealt with the systematic gender barriers that reinforce inequalities. So when you think about the already inherent and existing inequalities at household level, for example, you do not see microfinance being a key there. For example, if you look at things like access to land, while we've seen an expansion of microfinance institutions, and we know that microfinance institutions would love to also have, reasonable collateral-like land, we haven't seen that much improvement in access to land coming out of the interventions of microfinance. And in some places, you find that those who have land will want to hold on more to it because of the expansion of microfinance, so that they can have a much more likelihood to access funds than those who have no land. And that in itself can create and reinforce the inequality that we see at the level of household or in societies which are patriarchal. So, ladies and gentlemen, in this module was really to address and bring out some of the broad debates. There's a lot to read for you in order to get a little bit more in this module. But what I wanted to do for now is really to quickly introduce and give you some of the broad debates so you can use this to actually understand and explore a little bit more around this question of gender and microfinance and what it means for households in Africa. I hope you have found this session useful, and I look forward to seeing you in the next session. Thank you very much for listening to me.